See how it look. William kept going down though. Why? Oh, they had SMT at the homes. SMT. We dropped because of something up here. We dropped for a reason. Oh, SMT. SMT right here. Friday, Sunday, Monday. But that's not SMT though. One here. Alright, that's not SMT. Oh, yeah, I don't know what it is. Not the quarters though. That's not a quarter. I mean, it is monthly. It's a higher level monthly cycle. Oh my gosh. Appreciate it, Tay. Tay Trades. Appreciate it. What's up, Jay? I'm generally trying to fit like the dump behind. The dump behind of the day. Ah, there you go. Wait. There you go. That's all we dropped right there. Gotta turn the wicks off. Turn these wicks off. Turn these wicks off. Turn these wicks off. Okay. Much way more clear now. Bro, this shit way clearer when you take the wicks off. Like you understand. I understand it now. No cap. Here. The highs. Wicks don't really matter, bro. Wicks do not matter. If y'all didn't know, y'all hearing it here now. Wicks do not matter. What's up, Tay Trades? Appreciate you for sure. You trade? Like, what you be trading? Wicks do not matter. That make way more sense. After S&T, we look for a PSP. Not yet. Let it play. So even after that, you have another one. S&T made. Bro, let me show y'all how. Like, let me show y'all how. Bro, let me show y'all how broken this shit is, right? So we got a cracking correlation, right? We got a cracking correlation. So y'all trailing NQ2. We got a cracking correlation, right? So we got SMT. We got SSMT. Y'all probably don't know what that is, but we turn back on the Wix. Bro, this is so fucking crazy. That's all I'm happy when I'm wearing it, bro. Like, it's crazy as hell. All right, so you see these two charts? These two charts, right? So the SMT is already one sign of a reversal. The SMT is the first sign. The second sign is this candle right here. This specific candle is crazy. And I was asleep. I'm so mad I was asleep, bro. I'm so mad I was asleep. Literally so mad I was asleep. It's so like this shit's so easy. You mark out the top of this candle. Oh, I'm blocking the first chart. Oh shit, hold on. I didn't even know that. All right. Is that better? All right, there we go. All right. The SMT was the first cracking correlation. So from here to here, we got an SMT. SMT. Then out here, you see this candle right here. It's different type of candles on both charts. So on here, it's a bullish candle. On this candle, it's a bearish candle. Right? We not paying attention to YM. YM was doing his own thing. So after those two, right? This is two cracks in correlation, right? Indices are supposed to follow each other. Now we have an SMT divergence. That's one crack in correlation, and we have a different close on these candles. That's a second crack in correlation. So you can enter off the 10 o'clock candle, and it's expected to run into this candle's wick and drop. So price will run into this area of this candle's wick and drop down to the downside. If you drop down to the lower time frame, you make it a little slower. Bro, look at this, bro. Like, oh my gosh. This is your entry. When price comes back into this candle's wick, that's your entry. And you let everything else play out. Your draw liquidity was obviously the new day open the gap, new week open the gap, right? New day open the gap, new week open the gap was the entry, right? And that was your trade for New York session. It was obvious we was gonna drop because we was above previous day highs, had a divergence at the top, ran back down to the new week opening gap. It's fucking wild, bro. The market is like, and then like everything happens for a reason. So like right now we in a new day opening gap. Another SMT. Another SMT. After this SMT, I guarantee you, price is gonna run back up. Let me see. Let's just hypothetically spam trade. This is wild, bro. I don't know how I don't know how I missed it too. I missed it, and I'm so upset, bro. But this is what back testing do. Back testing get you right. Everybody thought we was gonna hold to the previous day lows. The whole time we have a new day open the gap and a new week open the gap on NQ, which caused a divergence between the two, which is wild, bro. Very very wild. I should have seen that. I'm disappointed in myself. Not gonna lie. Very disappointed in myself. Not gonna lie. Very disappointed in myself. Hold on, who said something in Discord? The Qs. All right. So basically, if you take the market, right, you take the stock market, you divide it by four. Every time you divide it by four, you divide it by four again. So the market, the Qs are the quarters of the market. The market is divided into four quarters, right? So you got 4 quarters of the year, 4 quarters of the month, 4 quarters of the day. You have quarters within the quarter of the day. This is called the quarterly theory, and I ain't gonna lie, that's what got my trading. That's what turned my trading up. Yes, futures is better because me personally, I started on options also. So, futures, I'm not gonna say it's gonna change your life faster, but you get a quicker head start simply because you got the funded accounts. You don't got to use your own money. Futures, you can set a physical stop loss. On options, you don't have a stop loss, but on futures, you can set a physical stop loss, a physical take profit. It's all liquid. It's all liquid. Um, you don't need a lot of money to start. Funded accounts are like $50, $50, and if you just learn the right stuff, you gonna go far. You are gonna go far with futures for sure. So, do you only trade certain quarters? Yes, yes. Time and price is the most important thing in the market. Time and price is literally the most important thing. Time and price is very very important. The market is, to me personally, the way I trade, and I believe the market is an algorithm. You're gonna see the same thing at the same time every single day. You're gonna see the same thing at the same time every single day. Same thing, same time every single day. Literally. If I showed y'all my setup, y'all would be like, "Oh my god, the same setup every single day." I promise. Yeah, I trade full time. I'm a full time day trader now. I don't work a 9 to 5. Do I like being a full time day trader? No. I'm actually making a video. I'm recording a video on that right now. By the way, I don't like being a full time day trader. How do you pick the correct? Oh look, I'm actually making a PowerPoint for my students on this. So this is the SMT. This is the SMT slide I got. So let's assume there are two correlated assets, asset A and B. If asset A makes a swing high, asset B is expected to do so because they are correlated. If one fails to make a swing high, it is an indication of a price reversal, right? So next slide, how to use it. You want to use the SMT when we're in a higher time frame point of interest. You can't just use a random SMT. It has to be at a point of higher time frame point of interest, and that would make it higher probability, especially at the right time at a point of interest, and you're gonna be butter. It's gonna work every time almost. It's almost guaranteed. That's the only thing I can guarantee in the market. SMTs. SMTs is almost guaranteed, bro, for sure. SMTs is almost a guaranteed thing. Can we see a setup? Yeah. hmm I'll show you my setup. I'll show y'all my setup. All right. So before I show y'all my setup, I'm gonna show y'all proof that I use this setup because I know it's a lot of people on here who don't live trade. I live trade on here on YouTube. I stream and all that. So I'm gonna show y'all my setup right quick. Well, I'm gonna show y'all the results of my setup. So if we go to where am I going to? Oh, premium, Leaper games. So if we go to my games tab, see, I'm in on so this is NQ. My entry is right here. Oh, like my desk? You want to see my desk setup or my actual trading setup? Let me know. I don't remember what he was. He wants to see your 5 monitors. Oh, I got one monitor. I got one monitor. I don't do all that 5 monitor stuff. I feel like that's just unrealistic. Hold on. How can I my setup is real. How can I show y'all? I just take the camera, I guess. All right, so this is my setup. I got this monitor right here and this keyboard. This is my outside, but this is my one monitor and my keyboard. This is all I got. I don't got 5 monitors. I only got one monitor. Oh, like the real setup? Okay, yeah, all right, bet. Yeah, the real setup, right? All right, bet. So I trade something called the Power 3. It's important to have a time-based model because the market moves on the algorithm, right? So when you learn the time of the algorithm, you'll have a higher probability chance of hitting trades, catching the right direction, and stuff like that, right? So you got the Power 3. So you got accumulation, manipulation, and distribution. This is the framework of the market. The market is gonna move in these three stages. You got accumulation, manipulation, distribution. So you can divide these up to the quarters of the year, the months of the year, the weeks, the quarters of the year, the months, weeks, days, and inside the quarter, inside the days. So I'm just gonna show y'all a quick breakdown. So we got, this is called accumulation. So we got accumulation, and accumulation is Asian session. I don't trade Asian session. This is a low probable session to trade. So you got accumulation, then you have manipulation. This is London session. So I trade London session. This is my bread and butter setup. So let's zoom in on London session. So within London session, let's circle it. Within this session right here, I'm trying to catch the low of the day, the low or the high of the day. So 70% of the time, London session is going to create the higher low of the day, and 70% of the time, Tuesday is going to create the higher low of the week, right? So within that manipulation time window that I'm trying to catch, I'm looking for us to manipulate into a higher time frame point of interest. So a higher time frame point of interest with an SMT. So we're going to manipulate into there. We're going to hit this point of interest. It's going to cause us an SMT with another asset. After we get that SMT inside this higher time frame point of interest, we want to see a move back to the upside. After that move back up, it's going to leave behind an imbalance in the market, which is the fair value gap on the lower time frame. After we get that, it's going to pull back, and this is going to be your entry. This retest on that imbalance after we manipulate and shift back up is going to be your entry. And then you ride it out. And this should hold on a bullish week. London session should hold the low of the day. So if we clear all this off and we go back to my chart, everything is live on my YouTube. My past lives, I actually took these trades. Literally took these trades. So yesterday, not yesterday, but Wednesday. Wednesday I entered right here. This is my entry Wednesday. This is my first entry Wednesday. Mind you, this is the low of the day. And this is CPI, by the way. This is news. I'm entering before news in the London session. So we got accumulation, manipulation, distribution, right? We manipulated into a higher time frame PD array, which is this fair value gap. You see how price manipulated under Asian lows into this imbalance that I was talking about? And that was the low today. Another entry I had was, would y'all believe me if I said I entered right here? Mind you, it's nothing up here at this level that's that I can enter off of because it's all time highs, right? Would y'all believe me if I said I entered up here? Right here at this level I entered. If we go to my chat, this is my entry over here on NQ. These are the type of entries I'm catching with my model. So do you wait for that entry? Yes, you can wait for an entry off the fair value gap. Me personally, I don't. But for people who just now starting out trading like me or the way I trade, you can wait for the fair value gap entry. Why don't you like being a full-time day trader? It's not what it is. It's not what everybody promoted to be. You know, you're supposed to be traveling, having fun, and all this, but it's not that. Entrepreneurship and only solely relying on day trading is the most stressful thing in my life. Not gonna lie. Thank God I got rent paid off for about 4 months or whatever, but it's not what it seems. And I don't want to be full. I want to go back to school and get a nice career, and then still trade, still do entrepreneurship stuff. And when my entrepreneurship take me out of my career, that'd be better than just going full time without nothing to lean back on if anything go wrong. Because anything can happen, right? We can't predict what's gonna happen in a couple years or whatever, but anything can happen. You can go on tilt, lose your accounts, blow your accounts, lose all your trading accounts and money and all that. But feel me? We just don't know what's gonna happen. It's like we don't know. We don't know. That's the only thing. We cannot predict what's gonna happen in the world. And I'd rather be safe than sorry. Especially me, I'm 22, y'all. I'm 22. I'm 22 with a kid, so I just need a little more precaution than a regular person. I need more precaution than a regular person. And I held throughout this whole day. As y'all can see, look, accumulation, manipulation, distribution. Accumulation, news manipulated below, and we distributed back up. I got in over here, but I got stopped out because of news. But I almost caught the low of this news. I almost caught the low of that move. We caught this trade, accumulation, manipulation, distribution. Same thing over and over again. Sometimes this is a model too. This is a model right here too, but that's for another time. Accumulation, manipulation, distribution. Can you show what you drew step by step on the chart? A full example. Like the power three thing, the accumulation, manipulation, distribution thing. Like draw what? What you want me to draw? I'll draw it though. Like the power three. Y'all not gatekeeping. No, whatever y'all want to know, I'll let y'all know. No gatekeeping on this live. No gatekeeping, no gatekeeping. All right, let's go through. Let's. I'm gonna show y'all another thing, right? Let's just back test this week. We're gonna back test this week. All right. So the power three works on everything. Power three works on a day, week, month, year, all that, right? Because every candle has to have an open high low close or an open low high close. Every candle has one of those: open high low close or open low high close, right? So if we look right here, we mark out Monday's high and low. So here's Monday's high. Remember, open, low, high, close, right? So mark out Monday's high, Monday's low, which is right here, right? So Monday we opened up, we put in the high, we fell and made the low right here, and that was it. Well, the low. So open, high, low, close off. Tuesday then came in and manipulated under Monday's lows into a higher time frame gap, which is on the daily time frame. Daily time frame, here's your higher time frame gap. Now, this is how I know Tuesday is going to put in the low of the week, right? Wednesday is distribution, Thursday is distribution, Friday would be a continuation or reversal. So your highest probability days are Tuesday, Wednesday, and Thursday. So that's the power of three on a weekly perspective, and that'll help you get your bias for the whole week. Can you show how you find your SMT entry? Yeah. So, like for example, we're going to 4 hour. So let's just use this past week as an example. To the 4 hour time frame. So to cancel out all noise, I turn off my wicks on my indicator on my charts, right? Because the wicks are just manipulation. So as you can see on NQ and ES, this is NQ, this is ES. NQ made a new high, right? So you mark out the previous high. So let's replay it. Let's say this is all we see. Why didn't ES do it? Took it out. This. Okay. Let me hold on 1 second. All right. Let's say this is all you see, right? So NQ has a high right here. You're gonna mark out this boss out liquidity, especially on ES. ES got a high right here too. So I'm gonna mark out this boss out liquidity. Right? So you mark out the highs on both of them, and then as price goes on, we can now see NQ took out the high, ES didn't. So it's already engineering a reversal. It's coming along. There that little retracement, ES is still falling, but it ended up hitting an imbalance in the market. So it pushed it back up. If we look again, we got another SMT right here. A new high has been made on NQ, but a new low is made on ES, right? So at this point, I'm looking to see where my entry will be, right? So with the right information, you can turn the wicks back on. Turn the wicks back on. And now price is expected to come back inside of this candle's wicks. This is a cracking correlation. So we got an SMT, which is one crack, because ES and NQ is supposed to follow each other, right? So when they don't, something is wrong, and it's a reversal coming. So we got the SMT, which is a cracking correlation. We have the opposite candle. So on NQ is bullish, ES is bearish. That's the second cracking correlation, right? So the candle after this one is supposed to go up into this bullish candle's wick and then reject. So we're gonna go to the lower time frame, right? Go to the lower time frame. You see how price came back into the area? Now I'm looking for sales. I'm looking for sales, and ES hit a breaker block. If you don't know what that is, ES hit a breaker block, which is right here, and you got an entry on ES too. Now we just let price play out, and we're gonna see what happens. Boom. Come over here. Dang, why ES not playing out? Oh, that's because it's on the 4 hour. See? Easy. Easy. Easy, easy, easy. And then once you get more advanced, you start using like new day opening gaps, new week opening gaps. Right? So let's turn this indicator on. It shows you your new week opening gaps, new day opening gaps. So once again, we have an SMT between the two inside of PD array, or a point of interest, as some would say. So right here, we got new highs being made on NQ. Over here, we got new lows being made on ES. That's a sign of a reversal. Then you have your point of interest. That's two correlations that's working with your bias, right? Now, let's say you just randomly bought, right? Randomly buying. Let's enter buys on NQ, on ES, enter buys on NQ. Let it play out. Now you got your reversal. So your SMT means most when it's inside of a point of interest. A point of interest in the SMT, that's how you know that point of interest is going to hold. What's good, Adrian? What's good, Adrian? But yeah, and that's how. Yep, that's how you do SMT. SMT has to go be in a point of interest for it to be valid. It's a lot of other factors too, but that's some deep end stuff that I gotta do a whole shebang about. But yeah, once you can read proper market structure the right way, you know market structure, and then you start learning SMTs and PD arrays. But trading becomes so much easier, especially time with price, because time and price works hand in hand. You cannot have price without time and time without price. You got to ask yourself: is it such a coincidence that when certain times of the day we have certain spikes or we have certain things that happen over and over again? Everybody be so scared of 930 when 930 is just manipulation on a day to day basis. That's all it is, manipulation. But if it was any other time, the market is not doing that. Feel me? Why does it only happen at 930? That's because time and price plays hand in hand. Time and price is brother and sister, husband and wife. Can you show me your recent trade and explain why you picked that SMT and why you entered? This one? Wait. Where? Oh, last time I traded was. Oh, let me see. I think my most recent trade was CPI, so that was after we saw Tuesday lows, right? Okay. Let me see. Break down this for you. Let's see if I can. Let's see if I can. This, by the way, my volume low. My volume low for real. Hold on. Oh, hold on. Am I good now? I'm good. Somebody gotta let me know, please. Let me know, please. Let me know. Let me know. Let me know. Let me know. 5 minute time frame. I'm good. I'm good. I'm good. I'm cool. All right. So let's go to my most recent trade. Go to my most recent trade. Let's go. Let's go here. Full-time day trading is annoying. I'm blessed to be in position because God is showing me I can work through a lot of things that I think I'm not ready for. But I would rather have a nice career and still making a lot of money on the side. So I honestly, it's not what it seemed like, in my opinion. All right, so going over my trade, I'm still low. Hold on. Honestly, I don't think it's. I'm listening to myself. It sounds like I'm loud. Cause somebody else. Am I low for everybody or just this one person? Adrian, am I low? Am I low? Am I low? Before I start explaining, am I low? Hello, hello, Mario Trades. Hello. No, you good? All right, bet. So we got this major swing low right here, right? So if we mark them out on all the assets together, we can see that on each one, this low has not been taken out on ESNQ, right? But on YM it has. So on YM this low got taken out. Now this is a cracking correlation. So we have we have SMTs. We have an SMT at the low. So whenever you have an SMT at the low, that's indicating a reversal to the upside. Now you gotta think. We got SMT at the lows during manipulation of London session, right? So London session is set to put in the higher low today, 70% of the time, 60% of the time. So during a time, remember time and price work hand in hand. During a time that we have manipulation where the high today is supposed to be put in, we have an SMT at the lows. That's like double, triple confirmation for my buys, right? So now that I have my SMT, I go back to one chart. Yeah, but it's across one asset, right? It's between two assets. So one of them is out of sync. I wouldn't say a liquidity grab because the markets can all be in correlation and one do a liquidity grab and the other don't. But this is when we completely out of sync. So if you look at NQ and ES, they going in the same direction. But YM is completely in a downtrend. So that's the YM is out of sync with the correlation between the other two. So YM is out of sync, right? So on top of that, at this point, I go back to one chart. So I can go back to my NQ chart. Now within that SMT, I'm looking for the power of three, right? So I'll turn back on my indicator and I trade London session. Remember I told y'all for London session, I'm trading, we got accumulation, manipulation. When we manipulate, it's into that higher time frame gap or order block or whatever PD rate you use with an SMT, right? That's remember I said that earlier. So one, we got our SMT with YM. Two, we inside our higher time frame PD rate. Y'all ask what is that higher time frame PD rate? The higher time frame PD rate is a higher time frame PD rate is anything that's higher than what your entry time frame is on. So manipulation right here. We got a higher time frame gap, which is on the 15-minute, and there go my entry. Boom, easy. That's it. But it has to be in the right time. It's a couple more other stuff that I didn't say, but that's because that's like some deep end. I'm still, you know what I'm saying, getting myself together with that. But off the Temple Power 3, got accumulation, manipulate into a higher time frame PD array, and then you continue off. And that's your low today. And let me show y'all how I promise y'all can go into the stream too. I literally enter this. I'm not gonna teach nothing. I'm not gonna ever show y'all nothing that I'm not using myself. Right? So at this point, the low of the day is put in. And you can target Monday's high, which is right here. Monday high is right here. Right? Let it play out. So your previous day highs, you'll draw liquidity. Boom. Easy. People be so scared of news, but all news does is speed up what's already gonna happen. So Tuesday puts in the low of the week and the low of the day. I could have held this all week if I was on my personal account, which I wish I would. I wish I was, and I'm gonna start using my personal account more. Not gonna lie. Got the gap right here. We held, and we just run it back up. It's crazy. Can you go a bit deeper on how to use YM? But yeah, I got you. Yep, I'll go over it. So let's compare the three. Hold on. So you got this one. And you have this one. So imagine you have all three of your assets. You got NQ right here. You got ES right here. You have YM over here. Now, our goal shouldn't be the top ticker, bottom ticker today, but not gonna lie, I'm trying to at least catch the reversal, right? Because it's hard to get on them. It's hard to get on to get in a trade during a continuation because it's like, where do I get in at? So I'm trying to catch the reversals, right? So first, only looking at NQ and ES. I'm gonna explain that right now. Yeah, if you can repeat how to use them, do they have to be in sync or out of sync for you? Yeah, all right, I'm gonna show you right now. So first we got NQ and ES. Usually, you should these two are good enough to use SMT with, right? But let's say these are in sync. So let's say both NQ and ES are in a downtrend, and let's say previous day lows are down here. Previous day lows. We're gonna clone this. So let's say ES and NQ took previous day lows. These two are in sync. Whenever NQ and ES are in sync, that's when you resort to YM. That's when we resort to YM. YM would be the dead giveaway of what's going to happen because instead of taking previous day lows, YM put in a new high. And that's when you use YM. You use YM when ES and NQ is correlated. Now you got your SMT above. Now you got your SMT on previous day lows. Do you do reactions or not? No, I don't do. I just be trading, bro. I don't do reactions. I just be trading. But you use YM when these two, when you can't find a cracking correlation between these two, that's when you bring in YM. But you should always be looking at all three, just because one of them could tell on the other two. One of them could tell on the other two, bro. Of course, anything for y'all. Appreciate the support, man. Anything for y'all. Anything for y'all. Because yeah, like I said, it's hard to enter off a continuation. But if we can find a cracking correlation and you get in before that reversal, a game changer. And that's why I told y'all when I caught that one trade, where is that? So you would look at ES or NQ, both, whichever one. So you would look for the weaker one, right? Because the weaker symbol will go further. Exactly. Yep. You look at the weaker symbol because that's the one that wasn't strong enough to make that higher low. How do you enter the SMT if it has no higher time frame PD array? How do you enter the SMT if it has no higher time frame PD array? Tom would tell. Well, you have continuation time, you have reversal times, you have Like it's time and price is everything. That's how I use it. But me personally, if my SMT is not in the point of interest, I don't want to take it because it can be a false SMT. Like in my PowerPoint that I made, here we go right here. Look, SMT has to be in the higher time frame point of interest for me. Over here is not in one, and I wouldn't take this because essentially this is this, right? You see how it kept dropping over here because there's no point of interest. It waited till we got to the point of interest. The point of interest that we named is like one of the three. Yeah, one of the three. Yeah, he said it. One of the three would have to. That's why I'm making this PowerPoint because one of the three have to. It's just straight sauce in this PowerPoint. I ain't gonna lie, like we like just simple, nice little simple stuff that I'm getting right for the students. They gotta work on this market structure though. Before they learn anything, they gonna learn this market structure. This is what they gonna learn first. But yeah, do you still use the 3 a.m. 4-hour candle or just the high low today? So the high low today we will usually be put in before between 2 and 5 a.m. That's the one the kill zone that I'm waiting for. I wait for my entries between 2:30 and 3 o'clock in the morning, and as long as I get that set up, I know for sure the high low today being put in easy, easy, easy high low today put in. No cap. I caught the high of Monday. This is the entry for Monday. Wait, yep. This is the entry for Monday. Caught the absolute high today. And after studying what I'm like learning what I'm learning, like what I'm teaching, man, it was crazy seeing myself catch that entry. And it been consistent, like consistent low, like these are real entries I'm taking. If I go on my YouTube on my live channel, like my lives, can you share anything about SSMT and Day's Curly Theory? Like what? Anything that's on the NDA? This recorded. Don't need that dude trying to find me and sue me. But the market is divided into 4 quarters. So you got yearly quarters, you got monthly quarters, weekly quarters, daily quarters, quarters within the quarters. So if you find a S&T between those time windows, that's your high low today. Take what I just said and backtest it. Take that what I just said and you go backtest that. Divided by 4 each time. 4, 4, 4, 4. Find S&T between the quarters. That's the nugget. Can you share anything? How did you catch the most recent trade you took? Oh, I just explained it. That was this one over here. The most recent trade was this one. CPI, before CPI. Easy power 3 trade. We had accumulation, S&T OIM, higher time frame point of interest right here. And that was the entry. And stuff get 10 times better because now you can start using options. So now that I know how to catch the lower high of the week, I can go to QQQ or like Tesla or something and catch the lower high today. Because all it's going to do is follow behind. Here go Tuesday right here, putting in the low of the week on QQQ. Whole rise up. Whole rise up. Whole rise up. Whole rise up. Then Friday reverse back down. Open, high, low, close off. Easy. With that short, I didn't use none I taught y'all. That was something else. Well, it is. I use the same thing. Accumulation, manipulation, distribution, power 3. But that was just time because, like I showed you, it had no previous data on top of the over to the left. When you're looking back, it had no previous data. So it's just, back testing, training my eyes when I see certain stuff, mastering time. Once you master time, it's like trading get way easier. Not gonna lie. Once you master time, stuff get 10 times easier. Yeah, I love options. I'm bringing options back to my chat. I had traded QQ the other day. I traded QQ the other day. It was beautiful. Chef kiss. Oh my gosh. I love cubes. I gotta go finish this. I gotta go finish this video that I'm recording. But I am doing a giveaway in my chat. I know we all trade futures. I'm giving away 2 funded accounts. So if y'all want to, y'all come join up. Don't gotta pay for nothing. It's a free chat. If you want to learn more, it is a paid side, but come join the free chat. Come join the giveaway. You know what I'm saying? We be having fun there. We be talking. We be laughing on VC and all that. And yeah, whenever y'all ready, come in there. I'm doing the giveaway, and I'm gonna go finish studying and finish this video that I'm posting today, and I'm gonna hit y'all up. I will for sure come back on here a little later and chop it up with y'all. For sure. But I'm finna go in the chat, hop in VC real quick. You know what I'm saying? Y'all wanna come chop it up, come in there and add me at Mario Trades. And yeah, after S&T and higher top rank PDA do you enter after a 2022 month? I didn't watch the 2022 mentorship. Not gonna lie. I didn't watch the 2022 mentorship. I just know the stuff I'm learning right now. But I'll catch y'all. Much love. I appreciate the support. Appreciate y'all stopping by. And I'm going to hop back on here with y'all later. Oh, video coming in like the next hour or two. So watch out for the video. Gonna be good. Gonna be good. Don't miss out. Don't miss out on the video. Yeah, the live will be up. I'm gonna leave the live up. Live gonna be up. I'm not deleting it. It's gonna be in here. And yes, I use fair value gaps. But hey, y'all hit me up in the chat. I'll see y'all a little later. More sauce gonna be dropped as I grow into here. So I'll catch y'all. All right.